Hello everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. I came out of a video talking about the Chinese stock market about more than a month ago, when things were looking very, very bullish on the daily, and a lot of people were wondering whether or not they should chase Chinese stocks. And I basically just said, hey, things are turning a little bit more bullish. I basically said short term it's gonna be a little bit more cautious, just because we're hitting a lot of resistance back then. Like price got the Hang Seng index got close to about 20,000, and it was hitting a lot of resistance. There were a lot of bearish divergence. So I was basically asking people to exercise caution. And sure enough, it did drop back down, back test the level around 17,800. I'm going to show you some of the video I just did and kind of go through with you in terms of what my rationale was a few weeks ago and what is going to happen moving forward. So, first question is whether or not I should get into Chinese stocks. I'm going to show you why I'm not really that interested in doing that, and I have a few minutes, basically just talking about that just a few weeks ago. That hasn't changed. Here it goes.
When it comes to the individual Chinese stocks as well. Part of the reason why is because if you just look at the performance of the Hang Seng Index, which is really going to be the best reflection of what Chinese stocks do, because most of the Chinese stocks are going to end up getting listed on the Hang Seng Stock Exchange in Hong Kong. So you're actually going to look at that more than looking at any other Chinese index. Is probably going to be the most reflective in terms of how the Chinese stocks are doing overall. You can see that my biggest problem over the last 25 years in comparison to the S&P 500 as well as the Russell 2000 small cap in the US, I can see a big problem is that there are going to be a period of time where Chinese stocks will outperform, and when it outperforms, it could be quite shocking in terms of how much it outperforms, right? But the issue is this: whenever Chinese stocks goes up, really you're talking about like US stocks will also go up at the same time. Like S&P 500 would go up if Chinese stocks go up, right? The problem is, conversely, if the US stock market goes up, there are actually a period of time where the Chinese stock market Hang Seng Index goes down. Now, that doesn't happen the other way around. Pretty much whenever Chinese stock goes up, I really couldn't find a period of time where when Chinese stock and Hang Seng goes up, the S&P 500 is going down. I really have a hard time really finding that. Maybe during this kind of little bit of bleep right here, right before the great financial crisis. But I really have a hard time finding that evidence otherwise. Pretty much whenever Chinese stocks goes up over the last 25 years, the S&P 500 goes up. Right. However, after the Trump administration has come in and after we started setting up, tariffs and things like that, which, by the way, like a lot of the same policy have been also continue to be carried out through the Biden administration. A lot of things have really changed ever since that trade conflict and the tariffs have happened. You can see that there are periods where the S&P 500 can do very well and the Hang Seng can do absolutely horrible during that period of time, right? And the same thing, like over here, around late 2020 to maybe early 2021, you can see there's a period of time where Hang Seng was doing pretty decent, but it started plummeting, but the S&P 500 just kept going on for like another year, just having a very, very strong bull market over here, right? Same thing so far. You've had Hang Seng kind of just been plummeting for quite some time over here, when the S&P 500 just continues to go up. Now, the question is, are you thinking that there's going to be a rotation? Is this going to happen where like the U.S. liquidity is going to end up floating into China? It doesn't seem like that's the case in the long term. You're talking about years. For the short term, maybe. For the medium term, maybe, right? But I think a lot of these kind of pumping of the Chinese stocks over the last few weeks is more based on trading behavior, more based on human psychology, and also based on the fact that I think Chinese is increasing their liquidity. They're probably printing money, and finally able to get some money to kind of stay within their stock market and kind of help stabilize it.
Yeah, so I don't think that the U.S. liquidity is going to really flow that much into China at this moment, because there's a lot of people who worry about geopolitical conflicts and things like that. Whereas conversely, the other way around is that the Chinese liquidity, I can totally see that potentially coming out of China and flowing into the U.S. It's unfortunate, right? So that's kind of my thesis. I do want to share with you some of the technical analysis that I also did using first of using Danny chart as well as using my
Things
chart.
like 2018, right? You're going to have a hard time getting the retailers to really come in now at this point in time.
So you can see that back then, this is just a few weeks ago, you see how bullish the daily chart for Danny's chart really, really looked, right? You're talking about having a big giant red ribbon going all the way up, which is a very, very, very bullish sign. You have price basically just going up. And yet well is also coming in on the daily chart, right? So you think that, hey, things are looking very, very good, but in fact, it was really, really topping at that particular period of time because there are some warning signs. You look at other time frames here too. This is the weekly chart. One warning sign you have is, yes, on the weekly you also have a very, very big buy signal over here, and it just kept going for about 3 weeks. And this is again like all this is like about a month and a half, 2 months ago, right? Since then, it's kind of found resistance up here around 20,000 and kind of dropped from there. So the problem that you're going to run into is if you end up chasing a move like that, you just start to have a little bit of a red ribbon, a little bit of bullish ribbon here being formed on this moving average based ribbon, right? Got way too far, way too fast, running into resistance. I don't care if you have a bunch of whales. Most likely you're going to have some kind of correction and cool down. And that's exactly what happened, right? And then if you look at the monthly chart over here too, you can see that when I was looking at this monthly chart, I was just basically saying that, and you can go back to this video if you want to, but I was just basically saying that, yeah, things got way too far, way too fast. You did have a monthly buy signal over here, but the problem is that it's still punching through a pretty thick blue ribbon, which is in general still a little bit of a bear trend coming on, right? You only have a little bit of increase in whale over here. You don't really have a trend yet, but you did have a little bit of an increasing buy signal over here, punching in this thick ribbon. But this thick ribbon, I suspect, would probably continue to serve as somewhat of resistance in the short term, rather than just allowing price just go and punch through up, right? If you look at, I'm going to play this clip over here.
Downtrend over here, right? The buy signal here may be a little bit noisy because it's buying signal going into a very thick blue ribbon that's like going down. So maybe this is more like a short-term kind of trade signal. But it's going to have a hard time like really trying to push for the blue ribbon over here. I think we have a much better chance over here now because blue ribbon is not as negative sloping. It's starting to kind of flatten here a little bit. And you're also getting really, how do you say that? You also really is trying to penetrate the red ribbon over here. And the red ribbon is also not as thick as it was over here. So I think this buy signal is maybe a little bit of a failure. But even your bot here and sold here is no big deal, right? Sell signal over here, has been very incredibly accurate. That really is going to help you avoid this big giant downtrend over here, right? Buy signal over here could help you capture some of the moves up here, but it's been a downtrend, so the sell signal is going to be what's more important, right? Right now it's kind of flipping buy, sell, buy. Like you really can see a little bit of a trend change over here. And Danny was kind of pointing out the entire way, and I've shown this on like Alibaba too a few months ago. I do think there's a potential, and there was no confirmation, but there's a potential that these Chinese stocks are starting to form a little bit of like Adam and Eve double bottom pattern, which Danny was really trying to horn into. And I do think that is looking kind of like that. Although I do think on daily and the weekly time frame, currently we're a little bit overextended. So the monthly, I don't know, maybe a little bit concerned for a little bit of retracement, maybe going sideways a little bit. And even if the candle goes sideways, like you're really talking about potentially going from like 19,000 to maybe like 17,000s, right? Like that's a little bit concerning. Now, the big support, where are you going to find the biggest support? Is probably this volume shelf line over here. And I asked Danny, this volume shelf is supposed to say like 17,800, somewhere around there. This is going to be very, very strong support.
So remember I was saying about 17,800. I'm going to go back here to the Hang Seng to the Hang Seng Index. It's really called Hang Seng, is not Hang Seng, but everybody calls it a little bit different. Hang Seng Jiso is what it's supposed to sound like in Cantonese. What are we seeing here? What did price end up doing? End up getting rejected over here around 20,000 here, very, very strongly with this big kind of gravestone doji-ish, kind of like a little shooting star type candle, right? So that wasn't fun, and sure enough, next thing you know, we're getting support, right? This candle over here, low is around 17,800. the low over here on this candle is around 17,800. So it sure seems like that was a pretty decent support. And why would that be? Well, if you look at the volume shelf, I couldn't look at the volume shelf because it's an index. But basically, that's going to be where price end up getting a lot of trading history over here, and that's where a lot of support is being at. Right on the monthly, on the Hang Seng, you can still see. I'm going to pull up the Blackhead Fund Flow indicator here too. You can see that whales have come in really since April, May, and June, and that also had a little bit of buy signal over here in April as well. So far, there's still a little bit more of a bullish trend being started, although you're hitting a lot of key resistance up here. What are some of the resistance that you're seeing? Well, you're hitting some of the zone over here is getting back above the on the monthly Ichimoku cloud here, it's getting back above the Tenkun or the conversion line, which is good, but it's getting rejected over here by the Tenkun or the baseline, right? And this is the monthly. So monthly Tenkun is around 18,700, somewhere around there. On the weekly, you can see that it got rejected off on the top of the weekly cloud over here around 19,000, high 19,000s or so. That's really the top of the Ichimoku cloud over here. So you're basically coming back down, and you have a lot of support down underneath now. On the monthly, you have the Tenkun around 17,300. If it ends up going down, you can find support over there. On the weekly, you might find support at the very confluence level over here at the Tenkun, right around 17,300 or so. You also have bottom of the cloud over here around 17,600. So you're going to have a lot more support that you previously didn't before. And on top of that, you also look at the Bollinger Band. It looks like it also got rejected by the 20-month moving average. And when it got rejected by a rising 20-month moving average, you can see that the 20-month moving average hasn't really been rising up like that for a very, very long time. The last time it was kind of rising temporarily was around December 2020 to maybe June 2021. Since then, it's just been a huge downtrend, right? So I wonder whether or not there's a little bit of a trend change, and because it's upsloping like that, it could serve as very, very poor resistance over the next couple of months for it to back test it and maybe go up higher from there. But you did have a pretty bearish candle for the month of May, and it looks like the month of June is kind of a little bit playing out. It's having a little bit of a hard time kind of getting above of that. But that's okay. Looking at the weekly, it does look a little bit more, it does look a little bit more promising. The reason why is, I'm going to get rid of the Blackhead Fund Flow indicator here. The reason why is, remember I was saying about the Ichimoku cloud where you have support down here at potentially around 17,300 to around 17,600, somewhere around there, and that is confluent with the bull market support band. It's right there. 20-week moving average is right there as a part of the bull market support band. And I think if you are, if you're kind of thinking about from a Bollinger Band expansion kind of thing, this big kickstart right here for week number 1, 2, 3, and 4 over here, what it ended up doing was really started the initial Bollinger Band expansion. And it really was what was allowing the 20-month as well as 20-week moving averages to really start to curl up, right? After you get way outside the upper Bollinger Band for about 4 weeks in a row, you're going to have some kind of correction and some kind of retracement to the mean. This is not anything surprising. So I do think that even moving forward, we're hitting some pretty important zone down here. There's some pretty important support zone. Danny was saying 17,800. I'm saying potentially even 17,600 and maybe even 17,300. Somewhere around there's probably going to be some pretty significant, support zone down below. It's a very interesting chart because right now it's stuck in a range. Right now it is stuck on the monthly. You are having some resistance that is trying to get over. You don't have the bullish cross quite just yet to really signaling the confirmation that there's really truly trend change. But you also have the bull support band down below. On the weekly again, you have gotten resistance up here on top of the cloud. You also have a little bit of a Tenkun conversion line resistance over here around 1,800 or so. But you also are stuck in a range. You also have plenty of support right here down below now. So I think most likely it's going to find support over here over the next few weeks. And after it finds support, after it bounces, it's going to go a lot higher. Now, the whole thing is, even if you just look at the weekly, there's a reason why it's been really, really difficult for things to kind of go up over the last few weeks. Because if you just look at the RSI, like all of this big giant move up here has been on a lot of bearish divergence. Price was higher over here, but RSI was lower. Price is low over here compared to that, but the RSI is higher, right? So you have all these kind of bearish divergences that sometimes just needs time to kind of work out. And I do think that this current retracement over here is going to be the reason why for this to happen is because you have a lot of bearish divergence that needed to be worked out. And it's working out that right now. It's trying to find some support underneath and it's trying to see whether or not we can bounce from here and go up higher. I do think that there are some, positivity coming in the Chinese stocks, most likely because Chinese liquidity has been pumping. And there's probably enough Chinese liquidity to end up staying there in China to stabilize the stock market here a little bit. How it's going to go moving forward over the next 3 to 5 years, I don't know. But I would say over the next like 12 months or so, it's starting to look a little bit better. And over the next few weeks or so, there might still be some volatility that's trying to work out. KWEB looks very, very similar to the Hang Seng Index, except that KWEB has one thing that didn't happen with the Hang Seng is that it had a bullish Tenkan Kijun cross. And its currently price is above both the Tenkan and Kijun. And both of these are going to probably end up serving as support of some kind moving forward. So it does look like the Chinese internet stocks are doing maybe a little bit better than the overall market, right? The overall market in China, the Hang Seng, there's a lot of real estate, there's a lot of banking, a lot of industrial things like that I don't really personally care that much about. But KWEB has mostly like internet stocks. You're talking about Baba, JD, Pinduoduo, PDD. You talk about Tencent. You talk about a lot of the other stocks that has a lot stronger weighting, and it looks like it's turning around the corner over here. So, what is it really doing in terms of the other stocks, right? Well, Baba is actually not leading. Baba is actually running behind a lot of the Chinese internet stocks now, even though it is a pretty big weighing on the KWEB. It just looks one of the more mediocre ones in terms of technical analysis. Speaking wise, it does look like it wants to try to form a Adam and Eve pattern, but so far the Eve pattern's having a little bit of a problem trying to get going. First of all, you don't really have much whales coming in, and if you end up going up, you might end up going up on some bearish divergence that might happen pretty soon. If RSI goes up above these points over here, your price is like still below you. You're going to basically run up on bearish divergence, right? You just recently look at it, we just got rejection over here at the Tenkan conversion line. So Baba's not looking that great in terms of compared to the other ones. Looking at Bollinger Band also challenged the 20-month moving average over here. Is turning a little bit flat. Looks like potentially pouring up, but it's still way below it right now, right? So Baba is actually not looking to be one of the ones to really change the trend. So what is potentially changing the trend? Is JD looking better? JD seems to be finding good support over here at the volume shelf, right? It also seemed to be having a little bit of flattening here at the 20-month moving average, but it also has a very, very strong downtrend. So it's hard to say whether or not JD is really helping the entire KWEB, but you did have price trying to challenge the Tenkan or the conversion line, trying to flip into support, right? Which is going to be a little bit better looking than what Baba is looking in terms of the short term. The other, and it looks like, well, initially you have a little bit more whales coming into JD, whereas Baba, like, it didn't really have any whales at all coming in, right? So JD actually seems like it has a little bit more short-term momentum over the next 6 to 18 months. Looking at Tencent is one of the ones that is actually making KWEB looking good. You had a bullish cross over here back in April, and basically price has just gone up and it's hitting a lot of resistance up here. But unlike JD, unlike Baba, unlike KWEB, unlike the Hang Seng in general, it looks like Tencent is just trying to hold up here. It probably has some room to go down here and test like 44, 43, somewhere around here, but so far it's not really doing that. So it's showing a lot of relative strength. Whales are going in terms of Tencent. PDD, Pinduoduo, is a very, very good looking chart. I was showing you a couple weeks ago in terms of what I think about Pinduoduo, PDD. Looks very good. Looks like a cupping handle after a cupping handle. And you had a bullish cross over here, and looks like things are just kind of pushed above the Ichimoku cloud over here. Actually tested the bottom Ichimoku cloud over here, and now it's just riding to Tenkun up as support. Whales are in. This is one of the strongest stocks in China is PTT. Yeah, it's just something to think about, you know. So I don't know. Like there's another stock that looks very very good, which is Futu. Futu is looking like it's just doing a little bit of a ascending triangle here, break above this line over here, horizontal resistance zone, and just doing a back test. Wells are still in, and overall, Futu looks a lot better. Futu is kind of like one of those fintech apps in Asia. It's taking over a lot of places like Hong Kong, Southeast Asia, and in a lot of places there, it's becoming increasingly popular. A lot of traders use it to trade on their phones. And majority of them actually trade like U.S. stocks. So U.S. stocks has been doing pretty well. Food has probably been doing pretty well too, and it shows you on the chart, right? So I think that Futu could potentially backtest some of the lower zone right over here. Like it wouldn't be surprising me to me at all if it ends up going to like 60, 61, 62. Right now, the price is around 68. So it wouldn't surprise me if we end up pushing down before going up higher. But this is also one of the jewels of Chinese stocks, if you will, right? So the internet stocks and and Futu are ones that stood out. Like, what do you think of NEO? NEO doesn't look very good at all. I mean, it's not even touching the Tenkan. There's not really a whole lot of whales. What about XPeng, XPEF, XPEV? Same thing, right? It's not really challenging the Tenkan over here, and there are no whales in, right? So all of this stuff is really telling us that there's a little bit of momentum going on with the Chinese stocks here. I do also want to show you in terms of the target prices, in terms of what the great Masby was also thinking as well. And he was really looking at a couple other index funds in China, but I really more care about the Hang Seng because that's going to be a more significant thing for it to do.
So lastly, we have the Hang Seng Index here, and also it's following market symmetry nearly perfectly as well. And that is the 45-degree angle. We can see how important that.
So just to kind of let you know, the great Masby, he has a channel, TGM Trading. He does a lot of collaborations with me. Like we basically do a podcast on another channel that talk about stocks, talk about crypto, talk about everything. He uses a lot of game theory to really try and see whether or not you can find support, resistance, and also can tell you about cycle analysis. So all these lines, all these curves, all these angles, they're going to be serving as either resistance or support of some sort.
That was throughout time, and it did break it a few times, but now it's basically underneath the 45, the longest it's ever been in history of the stock exchange, the index, and it looks like it's still holding a level, right? It's holding this blue level. And we can see from the beginning, this blue level, or this orange level was important, right? It came back here in 2003 to retest it, and finally that was confirmed as ultimate support, and then went up to the blue, flipped it right there from resistance to support with that. Then it went straight up to the green level, straight up to this level where it was resistance, then back down, then back up, and then finally got to the blue arcs where you can see those throughout time. Right here, resistance, and right here, resistance. And then back down, it came to the green arc, went back up, flipped the green level right here from previous support. We can see it was previous support. Now it flipped it as resistance once, came back down to the blue, flipped it twice. And now it's trending in a downtrend, right? But we can see clearly where support is, and that is the blue line. So this is probably the buying opportunity for.
So just to clarify in terms of the levels, the green line over here is around 22,500, 22,300, so around there. The blue line is around like 16,000.
The Hang Seng Index, if it ever got back down to the 15,500 level, and possibly a retest of that blue angle, which never really happened until right here in 1990, right? If you follow that blue angle all the way out, that could be a possibility in the near future where it could go through, or it could take some time where the blue line and the blue angle meet maybe around 2032, around there. But when we turn on the Ichimoku here,
So Matt's not very bullish on the Hang Seng Index, and I can see why. And right now, it's kind of stuck in the range. It's stuck in this arc right down here, and it's stuck in the range between the top line over here around 22,300 and around 15,500, somewhere around there. It's just been stuck in a range, right? When it's stuck in a range, it's just somewhere in the middle. It's looking a little bit weak. You don't really know how far it's going to go down, how far it's going to go up, and there's going to be a lot more resistance up here. Even if price gets up to like 22,300 or so, that's still going to be a resistance level that needs to battle to go up, right? I'm leaning a little bit more bullish. I'm going to keep playing, let him talk about the Ichimoku cloud on weekly.
We can see that it's also in a downtrend, right? It hasn't really closed candles above the Ichimoku since, it closed a candle here above, but that was a fake out back here in 2023. But it's around the same time, 2021. So it's clearly defined that since 2021, the bear market has been very, very strong for the Chinese markets. And they still cannot get above levels. Like, we can see why it got rejected right here. It was once again the top of the cloud. But now it's above the conversion line and it's within the cloud. So can this level hold? This doesn't necessarily need to come back to the blue level. Not necessarily. But the trend is still down. So there's really no reason to kind of buy into these right now until they get to lower levels, in my opinion, because that's where the risk reward becomes in your favor. And one thing I can point out right now that is a positive is the Ichimoku cloud in the future is starting to turn green. So that is kind of an indication that maybe we're at a support level in this zone here. So if you wanted to take a stab at levels, it could work, right?
Yeah, so it's just looking at it, and also what I was just showing you, they're going to be at very important levels, which is going to be 17,800, 7,500, 7,300, somewhere around here. There's a pretty confluence level here. It's also towards like the bottom of this arc over here, so you could potentially bounce from the arc and also bounce from the cloud down here before going up further, right? But he's also got a very valid point too, is because it is a downtrend. Like, I'm not gonna lie. Like, it is a downtrend, and there is not really any bullish cross over here on the Hang Seng Index. The Kijun has not crossed underneath the Tenkan, or conversion hasn't crossed back about the base. So you don't have a bullish cross to even confirm any kind of bull trend going on the Bollinger Band. You have a little bit of a uptrending 20-month moving average is a good sign, but it's still getting rejected over here, right? So if you ask me, yeah, like, unless if it really truly forms a little bit of a higher high, it's gonna be like a lack of confirmation, if you will, right? This is a little bit of a higher low, right? That's a little bit promising, right? But we really would like to get some benefit from forming a higher high, and that probably won't happen until when price gets about like 22,600 or so, which I think there's still going to be a little bit of ways to get up there. But if you ask me, I think that it's looking a little bit more bullish if you're also selective in terms of what you're buying. If you're considering buying more, like Chinese internet stocks, I think they may be better trend to do. But I probably would not buy Baba. JD, I probably wouldn't be that bullish on. I do think that Tencent could potentially come back down, maybe have a little bit of correction. So is Futu. I think most likely it might end up coming back down, do a little bit further back test here. But Pinduoduo, PDD, this one has the benefit of having whales, has the benefit of currently kind of at a pretty nice volume show over here as support. So this actually looks like one of the best Chinese stocks. Although whether or not the fundamental actually suits you, there are some people who basically on my comments are concerned about the fundamentals of Pinduoduo, PDD, and there might be some changes in terms of shipping regulations and things like that. So it's not completely risk free. If you ask me whether or not I should get into these stocks, I don't know whether or not what you should do. I'm personally not getting into them, to be completely honest with you, because I'm not really even that worried about the geopolitical risk. I'm just thinking about how, I was telling you in the beginning of the video, and what I was telling you a few weeks ago, how you can have the US stock market just keeps going up and the Hang Seng keep going down. If you were trying to capture any kind of up move on Hang Seng, I think you might be, be potentially making some pretty decent money on over the next 6 to 18 months or so, especially if global liquidity is going up. But I think the U.S. stock market and Bitcoin, they're going to probably capture a lot of these global liquidity. So to me, there's not really a real need to enter a Chinese stock market. But, you can certainly do whatever it is that you wish to do based on your own fundamental analysis and based on what you think. But I'm just going to show you how important the 22,000 level is in terms of resistance is going to be. Like, you're really talking about a multi-year, you're talking about like a multi-year resistance, right? That dates all the way back to 2008. I don't know. I don't like to buy things when they might be range bound over here a little bit. But anyway, I will leave this to you. I just want to show you what I'm seeing. But I can see it doing pretty well over the next 6, 12 to 18 months. I can see it doing pretty well. It might hit some of the range up here, and that could be a pretty significant gain. You're talking about like plus 15%. It ends up going from like 18 to like 2200, like plus 18-20% going all the way up, right? Which is nothing to sneeze at. Like, that's actually like 20%ish. That's actually nothing to sneeze at all, right? But just exercise caution because the trend is still downtrend. So anyway, thank you so much for listening. Have a good one. Bye.